Hey everyone, today is Monday the 6th of May 2024. Welcome again to a short video courtesy of investingsuccess.ca. In this video, I want to take a look at Fibonacci retracement intervals, and I'm going to show you some of these in the context of the S&P 500. And before we get too deep into it, just a reminder that Fibonacci retracement intervals are calculated based on a number that the ancient Greeks referred to as phi. And phi is actually 1.618. And if you want to see phi in action, just take the Fibonacci sequence, which goes something like 2, 3, 5, 8, 13, 21, 34, 55, 89. Take a number in that sequence, divide it by the number immediately ahead of it, and you're going to get something very, very close to 1.618. And the ancient Greeks actually called that the golden mean. And in ancient sculpting and in ancient artwork and in anything to do with proportion, you're going to see the golden mean at work. Now, we typically don't rely on the Fibonacci sequence per se in terms of analyzing stock charts, but rather we look at Fibonacci retracement intervals. And by the way, we call all of this stuff Fibonacci. Fibonacci, he didn't invent it. It was the ancient Greeks who had come up with this. Fibonacci simply had rediscovered this stuff in and around the year 1200. He wrote a book called Liber Abaci, in which he brought this mathematical technique to people's attention. And for some reason, he has been, awarded ownership of it, I guess, when in fact it really belongs to the ancient Greeks. But in any event, I'm going to show you a couple things here. If I take 1 divided by the square root of phi, that's going to give me a value of 0.786, in other words, 78.6%. So quite often, if you look at stock charts and you see a rally, if the price suddenly turns and the price starts to decline, in the extreme case, it will go down 78.6% of the rally. If you see a 78.6% decline, you can be almost assured that you've seen the full extent of the decline. If I take 1 divided by phi, I get 0.618 or 61.8%. That tends to be a very common retracement value on a stock chart. If I take 1 divided by phi squared, I get 38.2%. That is a very common retracement value as well. If I take 1 divided by phi cubed, I get a value of 23.6%. You will sometimes see these things on stock charts, not terribly common, but you will run into them. And if I take the square root of 0.236, I get a value of 48.6%. There's people out there who will tell you that there's something called a 50% Fibonacci retracement. No, never has been and there never will be. What it is 48.6%. And believe it or not, I do see 48.6% time and again when I look at pullbacks and corrective declines on stock charts. Now, I want to take a look in the next slide here at the S&P 500. I want to show you where a couple of these Fibonacci retracement intervals have recently made an appearance. Okay, so here is our E-mini S&P 500 daily chart. And you can see that in July of 2023, we hit a little peak. Market declined into October of 2023, and then it took off. Now that decline was, by my count, around 460 points. The recent decline that we have seen is in the neighborhood of 360 points. So 360 as a fraction of 460. There's your Fibonacci 78.6% retracement. Where else do we see Fibonacci in this chart? Well, after the October 2023 decline, we know that the market lifted very powerfully on the back of what they call the Magnificent Seven, these seven or so large tech stocks that the institutional players couldn't get enough of. And really the market rally from October of 23 until just recently was on the back of a handful of stocks. Not a terribly healthy situation, but that's what occurred. And by my count, we rallied around 1,130 points. And so this recent drawdown as a fraction of the rally, there's some more Fibonacci for you right there. So if you look at enough charts, you will become very attuned to seeing the Fibonacci mathematics at work. I was actually hoping for more of a drawdown. I was hoping for something in the neighborhood of either 48.6% or in the extreme 61.8%, but we're not going to get it. And there's a reason we're not going to get it. I'm going to show you that very, very shortly here. Now, in terms of why did we get this turning point late March, early April? 3 reasons. Number 1, Mercury was at its greatest westerly elongation, and if you read my Financial Astrology Almanac, I explain the science and the mathematics behind that. Anytime you get Mercury at its greatest easterly or greatest westerly elongation, the potential for a trend change is very real, and sure enough, here we go, we got it. Now, what added fuel to the fire in this situation was the fact that right around the same time you had Mercury turning retrograde. And we know that when Mercury turns retrograde, it does tend to alter human perception and human emotion, and it can quite often lead to changes in trend on a stock chart. So 2 Mercury events, occurring around about the same time, I'm not surprised that we got the peak in the market and the drawdown. The third reason I was anticipating a peak here, 1921, there was a mysterious figure called Professor Weston. Still don't really know who he was, but in 1921 he wrote a report, and he basically took the Gann Master Cycle, which is very nearly 20 years in duration, and it involves Jupiter and Saturn. He took that Gann Master Cycle, divided it into 2 parts, 2 equal parts. And for each part, he was able to show that there was a correlation to the movements of the planet Venus. And he was able to then produce a little chart, a little table, in which he took each half of the Gann Master Cycle, and he basically said, okay, for year number 1 of the Gann Master Cycle, you're going to get a market maxima in the following months. For year number 2, the maxima will be seen in the following month or months. For year number 3 and year number 4, and so on. So from where we are right now in this Gann Master Cycle, which began in the latter part of 2020, Weston said, hey, look for a market maxima in the month of April. Well, the maxima came in the last couple days of March, so pretty accurate in my opinion once again. And you can go back over many years of time, and you can see for yourself how accurate his predictions are, and they're based, as I say, on the movement of the planet Venus. So I don't think we're going to get too much more in the way of a drawdown. We might get a little bit of a retest of the recent lows, but that I think is going to be about it. And as I said, let me explain why I say that. I say that because of Louise McWhirter. 1937, she wrote a book, The McWhirter Theory of Stock Market Forecasting. And what she had done is collaborated with a banker at the Cleveland Trust Bank and had obtained all sorts of economic data on the price of iron ore, the price of coal, the price of wheat, corn, you name it. She looked at this price data, and she was able to determine that the general economy of the United States moves in 18.6-year cycles. She made a correlation then back to astrology, where she said, okay, the north node of the moon takes 18.6 years to move one time around the zodiac. And she was able to say that when the north node of the moon is in the latter stages of the sign of Pisces or entering the sign of Aquarius, you're going to have a financial crisis. And then from that crisis, 18.6 years later, you'll have another crisis. And so our last crisis, if you recall, was 2007, 2008. What caused that crisis? Well, at the time, if you had a pulse and when you breathed out, if you could fog up a mirror, wow, you were in line to get a mortgage. And people were getting mortgages who probably should not have been getting mortgages. And the rating agencies applied ridiculous credit ratings to these mortgages, and then these things got sliced and diced and cut up into tranches and sold off to pension plans. And the whole system just got poisoned and diluted with this garbage to the point where we had a full-blown crisis. Now, add 18.6 years to that last event, and history may not exactly repeat, but it certainly is going to rhyme, and you're going to be into some semblance of another crisis in 2026, 2027. What the root cause of this next crisis is going to be, I don't know. But we do know that the Fed is determined to keep interest rates higher for longer. That could potentially play into it. We do know that commercial real estate is in a spot of trouble. That could be a potential trigger. But there's going to be some semblance of a crisis, and the markets will drop, and money will be printed, and the government and the Federal Reserve will come to the rescue, and you know how the drill unfolds. So we've got a couple years before that occurs. Now, it's important to remember that the latter part of the 18.6-year cycle is what they call the exuberant part, the blow-off phase. And that's why I think the markets are going to be very good for the next little while at least. And I'm going to show you one more McWhirter aspect here, which I think feeds into my thesis that the markets are going to be generally fairly robust here for the next little while. McWhirter said, first of all, here's the north node of the moon. It's currently at 14 of Aries. The north node moves backwards, whereas the planets move forwards. So the north node of the moon in the midpoint of Aries will eventually get to 0 of Aries, and then it will go into the sign of Pisces, and eventually it will get into the sign of Aquarius somewhere in and around here. So the latter part of Pisces, the early part of Aquarius, yeah, that's where you're going to get your financial crisis. Now, McWhirter said that we should take a look at Jupiter. And here is Jupiter at 25 degrees of Taurus. And I said the planets move counterclockwise. When Jupiter gets to the sign of Gemini, and that literally is going to happen here pretty quick. When Jupiter gets to the sign of Gemini, McWhirter said that tends to give a positive boost to whatever the economic conditions are at the time. So we know, based on recent numbers, that first quarter GDP was running at, what did they say, 1.6% annualized. Analysts were a little bit dismayed at that number. Well, McWhirter says, fear not. Jupiter coming into Gemini is going to just give a little bit of a lift to the general state of the economy. The most recent non-farm payroll numbers were a little bit lighter than what analysts were looking for. McWhirter says, don't worry about it. We get Jupiter moving into Gemini. That's going to give a bit of a cushion to the general economic conditions. Now, there's one thing I do want to show you here, and I don't mean to alarm you, but I need to draw your attention to the planet Uranus. There it is right there. When the planet Uranus moves into the sign of Gemini, this is a once in 84 year occurrence. Okay, that's going to happen in and around 2027, right around the time that we're going to be in the midst of this 18.6 year economic crisis. You're going to have Uranus moving into Gemini. And again, I don't mean to alarm you, but it's a once in 84 year event. Back up 84 years in time, you're into the World War II era. Back up 84 years in time, you're into the events that underpinned the U.S. Civil War. Back up 84 years in time, you're into the events that underpinned the U.S. War of Independence. It seems like any time Uranus moves into Gemini, the potential for some sort of unrest or war is very real. And if you take a look at what's happening in the world today, it's almost, in my opinion, that we've got a bunch of these proxy wars going on. Russia and Ukraine, Israel and Hamas. You've got China saber rattling and implicating that they want to invade Taiwan. This is not healthy. This is not good, especially knowing that Uranus in a couple of years' time is going to be in the sign of Gemini right around the time that we have a McWhirter financial crisis. Anyway, I'm not going to dwell on that. I don't mean to keep you awake at night, but just be aware that stuff is coming at us. Now, let's look at something more positive here. I said that when Jupiter enters Gemini, it's going to give a lift, a cushion, if you will, to the general economic conditions. Here's the good news. Later this month, Jupiter enters Gemini. It's going to stay there until the end of 2024 and actually into the first month of 2025. So that's why I think we have seen the drawdown that we're going to get, and it was a Fibonacci measurement. And I think from here, we're going to get generally favorable. They may not, the job creation numbers going forward may not be gangbusters, but they're not going to be dismal either. The GDP numbers, they may not be off the charts ridiculous, but they're not going to be dismal either. And so thanks to Jupiter, I think the markets are going to have a cushion going forward. And I think for the duration of 2024, we're generally going to be in fairly good shape, barring some bizarre geopolitical event where the world comes off its axis and people lose their minds. So that is the good news. And we have Jupiter to thank for all of it. And that's going to be happening very shortly. So now the question is, knowing that Jupiter is our friend here, the question is, what happens from here? Does the market strongly rebound and can go on and make extreme highs? Yeah, it could. You have to ask yourself, though, will the price earnings multiples support, the S&P at 5,800 or 6,000? I don't know. I don't think so. A more likely scenario is that the markets broaden, and you've heard many people on outlets like Bloomberg express their hope and their wish that the markets broaden out, and there's less reliance on these big tech names. That, I think, is the most likely scenario. And so in a case like that, don't be surprised if you see the S&P move up at a fairly gradual pace. And, at some point later this year, yes, we are going to retest those previous highs and quite likely exceed them. But not, we're not going to get exceedingly stupid and have, S&P at 6,000 or something ridiculous. So I think you're going to see a broadening going forward, and I think there's going to be money-making opportunities in some of the sectors that have been overlooked as everybody went crazy on tech and AI. And, energy is one of those sectors. You know yourselves what some of the other neglected ones are. So keep your eye on some of those and some of the stocks that really have not performed recently, and I think you're going to see some opportunities there. All right. That's it for here and now. You know where to find me, investingsuccess.ca. You know what I've got available. And I look forward to getting some more videos out in the not too distant future. So thank you kindly for taking the time to watch this one, and we will talk again in the next week or so. Have a great day, and thanks again for watching.